Las Vegas is the last big apartment market across the country where rents are still below pre-recession levels, but momentum is back. That hole is being filled in. We're going to talk about that today on Apartment Market Dynamics from MPF Research. I'm Greg Willett. Shane Squires is here as well. Shane, talk to us a little bit about those Las Vegas rent numbers. How big a hole did we dig here, and what's happening at this point?
Well, average effective rents for new leases peaked at $853 in third quarter 2008. Since then, they gradually declined for 4 full years, not reaching the bottom until late 2012. That bottom point was average rates of $721, off about 16% from the peak. Today's average rent for new resident lease move-ins is $820, up a lot from the bottom, but still about 4% under pre-recession norm. Most recently, effective rents for new resident leases climbed 1.8% in third quarter and 6.9% during the year ending September. So the pace of upturn is rapid now.
That's great. So let's dig into those rent growth numbers a little bit more and talk about it, product classification. And what we see is we're 2 to 3% from full recovery in the Class A and Class B sectors, but still quite a ways to go, 7% or so for Class C product. And those classification numbers have some impact on the neighborhood level. Obviously, wherever you have the better product, that's where you're getting back to those pre-recession levels. And we've got a graphic for you looking at neighborhoods. We see here that we have 2 spots where, in fact, current pricing tops the 2008 levels. That's in Southwest Las Vegas and in the Summerlin, the Lakes area. And then one more to mention, in Green Valley, we have current rents that are really right in line with where we were back in 2008.
And looking at renewal lease pricing, renters that opted to stay in the same place are now paying 4.9% more than they were previously in third quarter. And a 49% share of those lease expirations were converted into renewals in third quarter. That's a little bit below the national average.
Let's jump into the occupancy numbers and another graphic for you. What we see is that current occupancy is at 94.4%, up 110 basis points during the past year. While that rate is short of the national norm, it's actually pretty decent for Las Vegas. In fact, 94.4% occupancy is a little bit better than what we saw going back to pre-recession levels. And certainly something to look at here is the numbers are not being impacted by new construction because we're not really delivering much of anything yet. So whereas in some markets you see lower occupancy at the top of the market because of product and lease up, that's not true in Las Vegas. We're at occupancy of 95% or better in both the Class A and the Class B communities. Comparison point, Class C properties, we still have relatively weak occupancy, 92.3%.
Yeah, and while completions in Las Vegas have been limited, building starts have become much more aggressive recently. Right now, there are over 3,300 units under construction, and activity is heating up, especially in Southwest Las Vegas submarket. There are over 1,800 units on the way, and those additions will expand the neighborhood's inventory by about 15%.
So we are starting to see construction come back, but we still think that demand is going to run ahead of deliveries for the next year or two. So some further improvement on the way for Las Vegas apartment occupancy, and that's going to help the rent growth pace. We do think that we'll be at 5% or better for annual rent growth over the next couple of years. So a good outlook there. So that wraps us up for the Las Vegas apartment market. This has been Apartment Market Dynamics from MPF Research. I'm Greg Willett. He's Shane Squires. Thanks for joining us.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.